how have, in your opinion, advancements in data science, predictive analysis, and automation improved the way firms optimize their trading desks and physical assets?
Yeah, so that has been the biggest sort of shift. And in some ways, I would say a lot of companies haven't really caught up uh, very well. There has been a lot of advancements in terms of sourcing data. In the sort of hedge fund world, that's called alt data. Everybody says alternative data. In a way, it's a way that you can kind of get market insights where it gives you an edge while it's not commoditized data. So there has been a lot of that, in some ways, like the advent of data science and that becoming popular has opened up a lot of room in terms of the what's called pre-trade analytics, in terms of understanding market dynamics. In some ways, that has resulted in, as we are kind of explaining earlier, assets give you a market edge because you see flows that others might not see from a physical perspective. But now with some of these more advanced data tools, maybe that advantage is no longer as big of an advantage, meaning others can proxy effectively what's going on in the market using that alternative data set. So for example, now there are ways that you can track cargoes in near real time, so you no longer, owning a port and having access to a port is no longer is that big of an advantage. Or, you can kind of look at essentially the storage, your various storage facilities, and you know how much crude oil is in Cushing storage at any given time. So that advantage is gone, or has been reduced. But where I would say there is a lot of opportunity is that as you kind of set up your asset base, you know, the other thing to think about is, like, there's one thing of optimizing single assets, let's say single storage facility, or single production. So you gain some advantage there, but then the best way to think about how you arrange these assets together and manage it as a portfolio, and that complexity, and having your asset sets as a system and looking at managing it as such gives you additional sources of advantage, because as these assets work together in a portfolio, it could be for example, marine facility linked to a storage facility, to a pipeline. If you work them in concert with each other, make decisions from a value chain perspective of a portfolio of assets versus each asset individually, there is an advantage that you can gain. In